Bharat Coking Coal Limited, or BCCL, one of India's most strategic coal companies, is finally hitting the IPO market in January 2026. But the big question is this IPO just about listing gains, or does it make sense for long-term investors as well? Let's break it down in 4 minutes. BCCL is a wholly owned subsidiary of Coal India Limited, a Maharatna PSU, and it plays a critical role in India's steel ecosystem. Unlike thermal coal players, BCCL specializes in coking coal, which is essential for steel manufacturing, and India still depends heavily on domestic supply for this. In fact, BCCL is the largest producer of coking coal in India, commanding roughly 58.5% of the domestic market. Its mining operations are concentrated in the Jharia and Ranaganj coal fields, with a mix of underground and open cast mines, making it a backbone supplier to steel, power, and cement companies. Now let's talk about the IPO itself. The BCCL IPO is a 100% offer for sale, meaning no fresh money will come into the company. Coal India is simply offloading part of its stake. The total issue size is around 1,071 crore, with a price band of 21 to 23 per share. This structure is important because OFS-only IPOs are usually more about listing dynamics than growth funding. Financially, BCCL remains a profitable PSU, but growth has moderated. For FY25, the company reported revenue around 14,400 crore, while net profit came in at about 1,240 crore, lower than the previous year. Margins have softened due to cost pressures and demand normalization post the earlier commodity upcycle. In the first half of FY26, profits dipped sharply, indicating that earnings volatility is real, especially in a cyclical industry like coal. So fundamentally, this is not a high-growth story. It's a cash-generating, mature PSU business. Now let's come to the most exciting part, GMP and listing expectations. As of early January 2026, the gray market premium is around 16 per share, implying a potential 60 to 70% listing gain if sentiment holds. That's a very strong signal, especially for a PSU IPO at this price point. The reasons are simple: low absolute share price, strong PSU theme, monopoly-like positioning in coking coal, and early year liquidity chasing defensive assets. However, investors should remember, GMP is sentiment-driven, not fundamentals-driven. It can change quickly. From a short-term perspective, BCCL clearly looks attractive for listing gains, but expect post-listing volatility because there's no fresh growth trigger built into the IPO. From a long-term perspective, BCCL suits investors who prefer stable businesses, PSU backing, and dividend potential, rather than aggressive capital appreciation. But there are risks you must not ignore. Coal is a cyclical industry, heavily dependent on steel and infrastructure demand. There's also increasing ESG and environmental pressure, which could impact valuations over time. And since this IPO brings no fresh capital, future growth depends entirely on internal cash flows and policy support. So what's the final takeaway? BCCL IPO is a classic PSU defensive play. Strong listing potential, strategic importance to India's industrial economy, but limited long-term growth visibility. Good for listing gains and conservative portfolios, not ideal for investors looking for a multi-bagger growth story. If you want to play it, define your objective clearly, listing pop or long-term stability. That's the key to investing in the BCCL IPO.